Hello everyone, I am Tejas Thakur. Welcome to the final video of this 12 video series of our module Debt Demystified. In the last video, we looked at credit rating symbols of CRISIL. In this video, we're going to have a look at the debt mutual fund scheme categories. Debt categories. First is the overnight fund. The investment is in overnight securities having a maturity of 1 day. The next in this list is liquid funds. Investment is in debt and money market instruments with maturities of up to 91 days only. The third in this list is ultra short duration funds. Investment is in debt and money market instruments with Macaulay duration between 3 to 6 months. Next is low duration funds. Investment is in debt and money market instruments with Macaulay duration between 6 to 12 months. The next one is money market funds. Investment is in money market instruments having maturity up to 1 year. Short duration funds. These are funds where investment is in debt and money market instruments with Macaulay duration between 1 to 3 years. Medium duration funds. Investment is in debt and money market instruments with Macaulay duration between 3 to 4 years. Medium to long-term funds. Investment in these medium to long duration funds is in debt and money market instruments with Macaulay duration between 4 to 7 years. Long duration funds. Investment is again in debt and money market instruments with Macaulay duration greater than 7 years. Dynamic bond fund. Investment is across duration. Corporate bond funds. Minimum investment in corporate bond funds shall be 80% of total assets, only in the highest graded instruments. Credit risk fund. Minimum investments in corporate bonds shall be 65% of total assets. Investment in below the highest rated instruments. Banking and PSU funds. Minimum investment in debt instruments of banks, public sector undertakings, public financial institutions should be 80% of the total assets. Gilt funds. Minimum investment in G-Secs or government securities should be 80% of the total assets across maturities. Gilt fund with 10-year constant duration. Minimum investment is in government securities should be 80% of the total assets such that the Macaulay duration is equal to 10 years. Floating rate funds. The minimum investment in floating rate instruments should be 65% of the total assets. Time to play on the front foot, but cautiously. We have seen this repeatedly. The objective is to have a clear-cut idea that this is the sequence of the categories when you move from left to right on the risk matrix, starting with the liquid funds, then the ultra short-term debt funds, short duration funds, credit risk funds, dynamic debt, medium-term funds, and finally, the long duration funds. It's time to notch up our risk appetite, but one at a time. Welcome back to the quiz time. Self-check questions. So the question number 1 coming up for you. What is the investment period in low duration funds? This should be pretty simple. The answer is investment is in debt and money market instruments with a Macaulay duration between 6 to 12 months. What happens in a medium duration fund? In a medium duration fund, the investment is in debt and money market instruments with a Macaulay duration between 3 to 4 years. The final question for the day. Ready? Here it is. What is the investment period for overnight fund? The investment in overnight securities should have a maturity of 1 day. Thank you so much for listening to us. Thank you so much for viewing all the 12 videos. If you have missed out on any video, please go ahead and have a look at that. I hope with this simple exercise of creating a debt model for you, we have been able to explain the basic concepts around debt and debt markets in the most possible, simplest fashion. I hope this gives you the confidence to discuss debt with your customers. And I hope again that you start promoting debt mutual funds in your day-to-day interactions with your clients and are able to increase your debt portfolio in the AUM. And it is not money being moved from equity to debt, but it is fresh money which you're getting into debt funds. With this, we end our module on debt demystified. If you have any suggestions on the module, or if you have any suggestions otherwise on what training topics you need us to introduce, please get in touch with us, either directly with myself and Meenakshi, or with our sales teams, and they can get in touch with us. It has been our endeavor throughout as a training function to help IFAs bridge gaps which they feel or they have identified, which is stopping them from growing their business. We want to be instrumental in your growth throughout. Thank you so much once again for all the patronage which you have given to our ProStart modules. We started around 2.5 years back with financial planning using Microsoft Excel as the first module, moved ahead to social media marketing, then taxation and understanding risk being respectively module 3 and module 4. Meenakshi has also been instrumental in creating 5 modules in this COVID-19 situation. And after this comes the debt demystified. Hopefully in the future also will come out with newer and newer modules which will help IFAs get more and more business and be more and more confident in their interactions with their clients. Once again, thank you so much for all the patronage, all the love, all the affection which you have shown us. Thank you once again. Take care.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.